Good morning. Thank you for tuning in to another pre-market pulse scan. The time is 9 minutes after 9 a.m. Eastern Standard Time. Today is February the 1st, 2017. Jumping right into the overnight markets, Dow Futures is up about 68 points at 19,859. And the E-mini NASDAQ 100 is up 31 and a quarter points at 51.44 quarter. E-mini S&P up 6 points at 22.80 half. Russell is up 9.10 and it's at 1368.6. And the Nikkei up 265 at 19,285. Crude oil up a half buck at $53.30. The dollar index still trading below par, but up 36 pips at 99.84. The euro is down 45 pips at 107.76. The pound up 54 pips at 126.45. And the Aussie down 19 pips at 75.59. Gold is off $4.50 at 1206.80. And silver is off 8 cents at $17.45 and a half cents. Now, gold did manage to get to 12.15 overnight, and silver managed to get to $17.62 and a half cents overnight. Currently, we are trading around the lows of the session. So, where do we go from here? Well, looking at the charts, overall, gold is still hanging in there. It's trying to stay above 1200, which is critical. It's crucial and critical. We need a close above 1200 this week. All right, to keep the lifeblood in this thing flowing. Failure to do so would constitute blood in the water. And when China comes back, it could cause a run on the gold, and we could see prices cascade back downward. We should keep in mind, too, that on the weekly chart, we are still in recovery mode off of the bear market lows. So with that said, we're going to need a lot of buying to come in here. As far as the US dollar is concerned, it needs to close above par. It can't close down here below par because then that signals further weakness going ahead. Now, it should also be noted that dollar weakness is commodity strength because gold and silver are both commodities and currencies. They have a little bit more going on with them that would make them, ebb and flow. So that should also be noted going forward. Excuse me. All right, let's get into some pulse waves and see what saith the algos. All right, things of note for today. First thing I'm looking at is I want to talk about the dry ships since it really showed off last night. So let's take a look here what we got. All right, we have a positive momentum reading. We have a 411, so that is a rally alert, which bodes well for a continuation pattern for dry ships. And another thing that we should note here is under the weekly column or 52-week column, we have it. We have a signal at 448, and that is key support for this move. You do not want to see the market take that out or close below that. A close below that signals an end to the bullish retracement off the lows, and then we'll see a return to those lows. You don't want to see a return to the 52-week lows. So therefore, I think we need to really see some more buying. We already hit the first target of $5. Now the second target of $8 to $10 is in play. That's going to be my immediate target on the dry ships. So that should be noted. We're still in it. We're still in a downtrend. We're still in a bear market. It's still negatively pulse waving. But if we can get some momentum in here, then this thing could bode well. So just keep an eye on that, and you'll see what I'm talking about. We got to keep an eye out. Now, the algos are saying that the momentum shift is definitely to the upside. So just keep that in mind. But the 52 week is being highlighted at that support level. All right, let's get into some alerts for the day. I got a question yesterday. Someone was asking me. They were a little confused because in the dry ships, the day before showed the rally alert, and then the current day showed a crash alert, and they were like, "Is something off? Are the algos a day behind or whatever?" And I was like, "No, you don't understand." And I began to explain and remind them of how that works. Remember, the alerts tend to lead the market 3 to 5 days out. So he knew what he was talking about. Same thing with the bonds. Um, they are what they are. Right now, bonds are off about 20, 30 seconds. And it is what it is. Earnings keep coming in. Just now, as I'm doing this report, Ford's January U.S. sales are down. They are down, but the stock is showing up about 10 cents in the pre-market at $12.46. Earnings are also coming into play, folks, with today being FOMC, so you got to remember that too. All right, rally alerts for the day. We have soybean futures and cocoa futures. Both have rally alerts, as they should, being that the dollar is down. Commodities should gather strength. Will we see beans in the teens? I don't know. Right now, we're looking at if we can get a close today above 1080 and 3/4, that will set the stage for a possibility of a run to the teens in soybeans. So for you futures traders out there, definitely keep an eye on those beans. Your risk is a little huge right now, so look where that support stop is. It's far removed from the market. So this trade is not for the weak of heart. It's not for the faint of heart. And you do have a rally alert, and you are in a bull uptrend market, but you do have some negative bot checks coming in on that negative momentum side. You got to keep your eyes out for that. You could see some volatility creeping there on you. Just play smart. Cocoa has a rally alert, and it is in a bear market with negative bot checks, so negative momentum is locked in. System is saying that you may possibly have hit the lows now and building a support for which the market to bounce and rally from. Keep in mind that traditionally speaking, cocoa would barely move, but ever since 2000, 2001, the market dynamics in cocoa futures has changed utterly. Therefore, you need to keep in mind that cocoa trades like soybeans, which trades like crude oil, which trades like the S&P 500. Those four commodities trade similar, all right, which means they are liquid, which means they are extremely volatile, and which means that they can punch you in the face. Cocoa is subject to wild reports intraday when you're trading it, even though that market opens at like 2 o'clock in the morning and trades at like 10 or 11 o'clock in the morning. It is uh, subject to skirmishes and military coups in the Ivory Coast, and that could make that market move in ways that you have yet to even imagine. In addition to that, soybeans, remember, is a grain commodity, which means that it is subject to lock limit moves up and down. It can lock on you and stay that way for a few days, depending on the circumstance. It is not uncommon for it to open lock limit. So please be careful when you're entering into these markets. You cannot divorce fundamental analysis from the technical analysis when you are trading those types of commodities. I cannot emphasize that enough. It's different when you're trading stock index futures. You can get by on crude oil. You don't really need to be too privy to that. But when it comes to the other commodities, I cannot stress enough. You cannot divorce the fundamentals from the technicals, because you can possibly get your face completely ripped off. You can end up decapitated. I can't stress that enough. All right, I'm off the commodity soapbox. Looking at copper, Dr. Copper has a rally alert. Dr. Copper is called Dr. Copper because Dr. Copper is said to have a doctorate degree in economics. A bullish copper means the economy is strong. Right now, we have a bullish copper. It is in a bull market, has a negative swing VIX with a rally alert, which means that we have now a base from which to launch from. Today's entry price is not far removed from the market, therefore you can expect a high probability breakout in copper today. As a matter of fact, the way that I'm looking at it right now, I am very tempted to take this trade on myself. I like it. It looks sexy, and I'm going to strongly consider an operation in this one myself today. Looking at the oil space, ticker symbol DIG has a rally alert. It should be noted that today's stock runner is telling you to be alert to the buy side of this market. Likewise, if you look at your weekly, there it's telling you that this market is definitely moving in the right direction. We're not too far removed from this key resistance level. A close above this level would be very powerful going forward. We still got a way to go yet, but it's giving you the target of where we should be headed if the long side triggers. All right, so you got your target there. Moving along, financial sector, ticker symbol FAS. Excuse me. That one is in a nice uptrend, good rally alert, good base for a launch, and not too far removed from the weekly target. When I say weekly target, I'm referring to the 52-week target. All right. Moving down, SVXY. SVXY is looking interesting because it has been in a pullback, and I think we have enough support now to build a launch from it. But we're still going to need to see more upside before this one really takes off. If it does trigger, the breakout could be quite substantial in the SVXY. Looking at UCO, still in the oil space, this one is not far removed from the market, and we're still positionally speaking in a bearish retracement off the highs, and we're locked in with the negative momentum. But we have a rally alert which suggests that we could be seeing a base or a bottom in the short term. In the uranium space, we have three that have rally alerts. That's ticker symbol UEC, URA, and URRE. All of these have rally alerts. The first two, UEC and URA, are in a bull market, and URRE is in a bearish retracement in a bull market off the highs. This one may be ready to bounce again, so we'll be looking at that. All right, Pretty Ricky. Pretty Ricky right now has a bull market lock-in, and we have positive momentum here on the swing trade side. And our entry price is right there on our 52-week, which is awesome. But we must keep an eye open for the stop runner. Your stop runner is equal to today's support, which means that if taken out, the cascade race to the bottom could be significant. I would recommend, if you're going to play Pretty Ricky, that you use the recommended intraday stop loss and possibly be ready for anything on that one. Let's see. Let's take a look at NAC. Nick, Nack, Patty, Whack. All right. Nick is still locked in the uptrend. We're positive pulse waving, but we have a crash alert there. Therefore, trade lightly. Notice this is an extraordinarily tight stop. It's like that for a reason. The momentum reading is highlighting the sell side and highlighting the intraday support. Therefore, you probably want to trade lightly. Looks like where we are with the entry price is setting right at a resistance point, a key resistance, which means if we do trigger and it breaks out from there, the run to the upside should be good. Please make a note of the weekly, the 52 weekly, and you see that price there. That's your target. All right. If you are long and it hits that target, that's the point you want to consider taking money off the table. However, if that part is also taken out, that is the next level also that you can add to your position. So this one is rather interesting. This is interesting. So just be mindful if you're going to operate in that one. All right, hold on just a second. Last but not least, I want to talk about the Dow. The Dow, being that it's up strong now in the pre-market, there's a good chance it could continue to rally, especially going into the FOMC. So with that said, I think the appropriate strategy in this case is going to be to put on a Dow position right after the FOMC. I won't do it beforehand because typically, depending on the situation, markets tend to rally into the announcement and then pull back afterwards. So because we're in uncertain times with a new administration, I'm just going to chill and see what happens. I'm not going to put a ticket in pre. Normally I would, because it doesn't matter. But we run uncertain economic risks where the Fed could come in and shock the market. It's not above them or beneath them to do that. All right, so with that said, opening bell is already here. So remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. We should keep in mind, too, that on the weekly chart, we are still in recovery mode off of the bear market lows. So with that said, we're going to need a lot of buying to come in here. As far as the U.S. dollar is concerned, it needs to close above par. It can't close down here below par because then that signals further weakness going ahead. Now, it should also be noted that dollar weakness is commodity strength. 54 pips at 126.45, and the Aussie down 19 pips at 75.59. Gold is off $4.50 at 1206.80, and silver is off 8 cents at $17.45.5. Now, gold did manage to get to 12.15 overnight, and silver managed to get to $17.62.5 overnight. Currently, we are trading around the lows of the session. So where do we go from here? Well, looking at the charts, overall gold is still hanging in there. It's trying to stay above 1200, which is critical. It's crucial and critical. We need a close above 1200 this week. All right, to keep the lifeblood in this thing flowing. Failure to do so would constitute blood in the water. And when China comes back, it could cause a run on the gold, and we could see prices cascade back downward. S&P up 6 points at 2280 half. Russell is up 910, and it's at 1368.6. And the Nikkei up 265 at 19,285. Crude oil up a half buck at $53.30. The dollar index still trading below par, but up 36 pips at 99.84. The euro is down 45 pips at 107.76. The pound up. Good morning. Thank you for tuning in to another pre-market pulse scan. The time is 9 minutes after 9 a.m. Eastern Standard Time. Today is February the 1st, 2017. Jumping right into the overnight markets, Dow Futures is up about 68 points at 19,859. And the E-mini NASDAQ 100 is up 31 and a quarter points at 51.44 quarter. E-mini